Good morning, Namaskar. I'm Divakar. Welcome to the live session of Bulls and Bear Bulletin. Today is 21st March 2025 and the time is 9:24 a.m. Before actually I go for discussing on the market trading opportunities, let me just quickly show you the topics which I'm going to discuss today. I'll be talking on the Nifty and Bank Nifty technicals, which are very important before you take any trade. You need to study and check the fundamentals and technicals before you take any trade. So I'll be touching that. And the second one would be the global market scenario, how it can impact the Indian market for today's trade, and the moving average where you can study and check on a stock or a index how it's positioned, and then finally option chain, my favorite, where you can check the support and the resistance level for today. And then I will check on the global market scenario, and also the broader market, and finally explore whatever trading opportunities for the day. And also I'll be discussing the two favorite strategies of mine, bull spread and iron condor, which are going on very well on these kind of conditions of the market. So the special topic included on today is trading mindset psychology. So we'll be discussing all these things. So don't go away and keep watching. And if you're not subscribed to my channel, I request on this context to subscribe and like my channel. Well, if you look at the Nifty chart on the last week of September, the Nifty made a high of about 26,300 level here, and then it started declining, and around 24,800 level here, it initially showed the impression, it gave impression that it's consolidating and may bounce back once again. But however, it started declining and made a low of about 23,300 level. By this time, Nifty had lost about 3,000 points. We felt the correction is over, and when we saw this, bounce back, that gave a kind of impression that the correction is over and the bull run has begun once again. But we were wrong when it took resistance here again at around 24,800 and started declining. You can see the volatility, but it was going down and down and made a new low of about 22,980 level on 4th of March. From by this time, Nifty had lost around 4,300 points, or corrected by about 14%. That's huge. So from here, we did know that market is on oversold condition, and it has to actually bounce back somewhere. And as expected here, you can see the market bounced back, consolidated, again bounced back. In the last 4 or 5 sessions, we are seeing market is building on strength and going upwards. So yesterday we had a fantastic rally and crossed the 23,000 level for the first time in many trading sessions. So it closed on a strong note at around 23,200. Let's see how it's position now. The market just opened, and the open was at 23,168, around 20-30 points down from the previous close, and made a low of about 23,132. High you can see 23,199 above the previous close. So it's a good sign. It's trading around 15 point down, and similarly Nifty Bank is also on the flat note at 20 points, trading around 50,000. That's above, trading above 50,000. Both are on a very strong note even now, I can say. On the 1 minute candle, if you see here, the small volatility, it has given opportunity for buying on dip. Well, now the question comes, when do we buy? Whether immediately can we buy, or we look for some dip, a small kind of a a dip where we get an opportunity to buy. Well, that is up to the individual level. See, there are two ways to look at taking a trade. One is for a kind of a long term uh, uh, than the intraday. So carrying it the position for a couple of days to a week or so. In that way, you can definitely enter the way it is. If you're looking for strictly intraday, you should look for a dip and buy. So if you look at the market after making the 23,199 high, it has come down to 23,155. Even this can be a good buying opportunity. So anyway, we will explore our trading opportunities. I generally wait for about 5 minutes after a market opening to get the proper data on the option chain and the broader market, and then take a trade. So please bear with me and keep watching. So let me quickly just go and see how the global market now is looking. If you look at the US market, the S&P 500 index is just minus 0.22%, and the Nasdaq, the tech index, is minus 0.3%. Not a very uh, um, movement where it's going to make any impact for Indian market. And if you look at the UK market, the FTSE index is flat at minus 0.05%. And if you look at Japan, on the Asian market is plus 0.3%. And finally, if you look at the Chinese market, the SSC composite index is minus almost 1% at minus 0.94%. So except China, all the other market looks like flat and not going to make much of impact to the Indian market for today's trading. So now let's quickly go check how the broader market is looking. So on the first 5 minutes, if you look at the data, the number of stocks traded 2,429, where 1,880 stocks are advancing and 489 stocks are declining. Clear cut indication of the market sentiment is strong as of the first 5 minutes of opening. And I want to remind you that I've been telling the trend that definitely gets changed often in the volatility. So we have to keep checking this to know where we are standing during the day, maybe every half hour or 1 hour once. So let's go check the option chain now and see where we can find the support and the resistance level. On the Nifty, the spot is 23,189. So if you look at 23,200, uh, on the 27th March expiry. Today is the first day of the new week expiry. 90 lakh is the call open interest, which you can see on the left side here, and 73 lakh is the put open interest, which you can see on the right side here. So suggest there is a strong resistance. And if you look at 23,300, you can see 52 lakh versus 16 lakh. And if you come down at 23,150 or 23,100, you can see 58 lakh put open interest versus 44 lakh call open interest. So the support is at 2300 and the resistance is 23,200. And you can see 23,000 having a good support at 1 crore 9 lakh put open interest versus 76 lakh. So 23,000 and 23,100 can be looked at as the immediate support level, and 23,200 and 23,300 are the resistance to look at. So based on this, we can look at taking a trade. So we are around the resistance level, so we have to wait for the market at least to come towards 23,100 level to take a trade. Or if it crosses 23,200, perhaps then we can build up a trade. Now, just as and when I'm speaking, the market is trying to cross the 23,200 level. So, well, we can probably execute a quick trade. So let's just go ahead and buy the 23. Let me just open a basket. Let me just take a trade for 23 200 call buying and 23 400 call selling becomes a bull spread strategy. And the idea is we should never buy a naked call or put on the volatility. You may see a good profit, and at the same time it is going to quickly go back and take out the profit and may go into the loss also. So it's very risky trading the naked call or put options. So the best would be to buy the ATM call near to the spot, that is 2000 and then sell couple of 100 points away a call of the same series, that is 23 400 call. And this way you are going to hedge the naked call or put option. And this strategy, bull spread, is a wonderful strategy. The margin is less, so we can actually go ahead and trade on this. On this context, friends, I would like to give my disclaimer here. The live session which I am doing is purely for the purpose of education and information, and a trade which I am trying to show you is only a demo trade. So please do not copy my demo trade, and if you are doing it, you are doing it on your own risk. So please consult your financial advisor before you take any trade. So let's update on the notes here. It's very easy to monitor a note. So we'll so today is 21st March, and on Nifty, my view is bullish. So bull spread is the trade which I'm reckoning. So before that, I would like to give my support at 2300 and 23,000. Now resistance at 23,300 is the resistance. So bull spread is the strategy, and buy a 23,200 call and sell 23,400 call. So recommendation is you have to trade with minimum 2 lots or more, 5, 10, 50, 100, but trade with the minimum lots, never trade with 1 lot. And first is the stop loss. Strict 500 to 800 is the stop loss on the individual per se. Now what we do is, when we have 2 lots, as soon as we see some profit, we have to exit the first lot or the 50% of the lot. Exit first lot at 500 profit, and exit second lot with keeping a trailing stop loss of about 200, 300, and so on. So what we do is, when we take a trade, if you are trading with 1 lot, you see profit coming up, and then because of the volatility it may come down, and you may assume that the profit is going to come back again, and it may not. So in those scenario, so you would have seen the profit, but you would fail to actually you know uh, uh, enjoy it. The best thing for that would be, if you trade with multiple lots, keep on booking partial lots whenever you profit. So when we see, say, about 500 rupees, first book one lot, and then keep a trailing stop loss about 200. If the market is on our side, increase the trailing stop loss, or if the market goes against our trade, let it hit the trailing stop loss, so we'll be assured of some profit. Or, however, if as soon as we take a trade, if the market is going against us, the stop loss would be about 500 or 800. Well, let's check now how things are looking on the Bank Nifty. You can see the market on the Nifty is going fantastic upwards. So Nifty Bank, you can see on the 1 minute candle, very similar to Nifty. So if you look at the option data now, it's a 50,100 or above, and if you look at 50,000, he is having a good support. In fact, it's a kind of a fight between the bulls and bear, not a strong support. The support is only at 49,500. So here it's make or break. So once 50,000 is crossed, now the Bank Nifty is trying to go upwards. The 50,500, if you see, there is a resistance, 12 lakh call open interest versus just 2.3 lakh. So right now, um, we can look at a bull spread even on Bank Nifty if we are going to get a dip around 50, 100 or so. Whether that's going to be possible or not, we have to see now. 50, 100 is what I'm seeing. So let's go check a quick trade on the Bank Nifty, also taking a bull spread. So buying the 50,000 100 call, and selling the, say, 51,200 So I've created a basket here for Bank Nifty 21st March, and you can see I have added buy 50, 100 call and sell 50, 800 call. This makes it a bull spread. The margin is less, so the rules remain same. The profit is based on the two lots. We will exit one lot with, see, already the first lot is touching the 470 profit, so we have to exit the first lot, and the second lot should be carried on with the trailing stop loss of about 200 on Bank Nifty. Also the rules remain same. So bull spread is the strategy for that also, because the support, what I'm seeing is 50,000 is getting built up actually, and resistance at 50,500. So bull spread is what I'm looking at, buying 50, 100 call and sell 50, 800 call. Rest of the things remain same. And on this context, friends, I would like to give my disclaimer once again. The live session which I'm doing is purely for the purpose of education and information. So please do not copy my demo trade. If you're trying to copy my trade, you're doing it on your own risk. So please consult your financial advisor before you take any trade. So buying the 50, 100 call and sell the 50, 100 call, and the stop loss is 500 to 800. So already we have to exit the first lot. So first lot and exit second lot with trail stop loss of 200, 300 and so on. So I have already explained the advantage in trading the minimum two lots. So the idea is, if you trade with one lot, you will see the profit coming, and you will be thinking whether to book or profit, or if you have a higher target, then you will wait for it, but it may not go there and come back. And when it comes back, you will feel the opportunity for booking the profit is gone. So to avoid that, if we go with multiple lots, we can book partial profits as soon as we see some decent profit, like 500 rupees, and then carry on with the remaining lot as and when the market is on supporting us. A clear cut exam of yesterday and day before yesterday's live session are the videos. If you can go and watch it, you will be seeing the fantastic example for the executing the trailing stop loss. So one of the best markets, I just kept on increasing the trailing stop loss on both Nifty and Bank Nifty. It started from 200, went on about 1,500 kind of a trailing stop loss. So amazing, that's how it works. So we will not know the target. It's impossible to know that. The market decides that. So we just have to go and be with it. So it works really well. And so as of now, there are two trades going on. You can see already on the Bank Nifty, the trailing stop loss, you can see can be increased to 300. And on the Nifty, the profit is 900 as of now. So the first lot exit at 500 has happened, and the trailing stop loss now is 400 on the uh, Bank Nifty. So let me just while showing the chart, update some things here, because it's going to be easier. So first is the support at 2300 and 23,000, and resistance at 23,300 and 23,400. Now we will just see how it works. So bull spread is the strategy which we have executed. Buy the 23,200 call and sell the 23,400 call, and stop loss is 500 or 800, and then trailing stop loss is begin with 200, now 300, and now it's 400. That's the trade on Nifty going on. So meanwhile, so friends, on this context, I request you to subscribe to my channel and like my channel. If you have any questions, you can post your questions on the comment section. So along with the YouTube channel, you can also follow me on my Twitter account at BNBBULLETIN. So if you have any questions, as I said, if you post it, I'll be happy to answer that. So, well, friends, the market now has touched the high is 276, going on really well. Meanwhile, let me, as we have already taken two trades and executed and going on, let's go and check on the moving averages, which I mentioned. I'll be talking about it. So, what is a moving average? What is a moving average? Moving average is nothing but for a particular period. If you are going to take the price of a stock, a closing price of a stock, and for that period, take an average. For 10 days, if you take a closing price of a stock or index and take the average, that becomes the moving average of that particular stock. Now, why do we have a moving average? Moving average helps in identifying the stock behavior and gives us actually a clear picture in identifying or looking at its position. So on studies, the most popular in moving averages are the 20-day, 10-day, 50-day, 100 and 200-day moving averages. So these five moving averages are the popular ones. So you can see each line drawn represents the particular moving average, the 50, 10, 20, 100 and 200 moving averages. So when the Nifty was on the all-time high, you can see it was trading above the all moving averages. So obviously the average goes up when the price is going up, and the average comes down when the price starts coming down, right? So when the Nifty started breaking started coming down. You can see it broke all the moving averages, and you can see when it made a low, it was actually trading below all these five moving averages. So the moving averages for 10-day versus 200, there'll be a lot of difference. The 10-day actually, we know it's for short term, and thus gives the stock movement price. When you compare to 200-day, it becomes a very small period to check whether how the performance is, whereas the 200-day gives you a stronger performance because it shows the consistency in keeping up the price. So 200-day becomes the most important moving average of all. So once the stock starts trading below that, falls below that, it's considered as um, bearish or become weak. And if it's trading above the 200-day moving average, it is considered as a strong or is on bullish mode. So market now is somewhere here. The nearest moving average we can see is 23,520 now. It has crossed the 10-day, 21-day, 50-day moving average. If you can go back to see my video a week back or 10 days back, when I'm talking on the moving average, I was telling that it has to cross first the 10-day moving average, which was 22,707. Now that it has crossed all this, and the nearest moving average now has become the 23,520, the 100-day moving average. See, it's somewhere here. Now it's trading above the 50-day moving average, which is a very good sign. And it's showing strength, and definitely we can build hope as and when the market actually goes upper and upper. So that's the moving average part, and it will be very easy to identify a stock or index based on moving average study. It's definitely one of my favorites, and it's become very useful in my trading journey. Well, friends, let's go back to Nifty and see how things are. It's comfortably trading around 23 to 50 level, and what we do is now, well, perhaps I'll be looking at 23 800 call of April 3rd. Well, it's trading around 23, and similarly, I'll be looking at 22 900 put of April 3rd. Okay, it's trading around 60. So what I'm keeping is I'll change this to a 15-minute. Well, see, I'm just keeping the call and the put option be ready if the market actually becomes non-trending, and then this become useful. As of now, as of today, I don't think so. We should be looking at selling a call option or even selling the put option, because if the market aggressively reverses, it will not work out. So I'm not so comfortable right now to take this strategy. I'm just keeping keeping it on the watch list. So, well, market is extremely strong and absolutely no issues. So if we are going to check on our trades, how it's placed, the 149 call option is trading at 178 comfortably at about 1093. So we can increase the stop loss, trailing stop loss to now 500. So that's how we are continuously blocking it. And on the Nifty Bank, also you can see 356 call option is trading at 383, and you can see 930. So we can increase it to 500 on trail the second lot with we started with 200, 300, 400. Now I'm going to make it 500 on this also. So you can see here, if the market all of a sudden turns and comes back, because we kept the trading stop loss at 500, we are assured the 500 on the second lot and 500 on the first lot. So 1000 rupees is assured on the. So we will update on the. Well, that's how it's going on. You can see the bank nifty has come down and almost near the. Oh yes, almost. I think it's going to hit the stop loss now. Well, it's not. Well, friends, it's 10 o'clock and time for me to take a break, and I'll be back soon and continue the live session. So please continue watching, and I hope you have understood the concept on the trailing stop loss. So if the market is going to go above, so we'll keep a gap of about 400 rupees from the trailing stop loss to the actual profit which is shown on the board, and keep on increasing it. And if we think the market is becoming weaker, we can take the gap to a closer one. So that's how we can get the maximum profit out of it. So if we are going to check, the bank nifty has hit the stop loss now, and let's see whether the nifty has hit the stop loss. Well, it's very much near, and if the stop losses hit, and if you have a question that the market, if it rallies later, are we not going to lose the opportunity? Well, for the same reason I have been telling, we have to trade with multiple lots. So the more the lots we can book on the regular intervals, the lesser the lots. If we have two lots now, we have to exit. If there were three lots or five lots, we could have still carried with one or two lots with increasing trailing stop loss. So basically, you know, that's the advantage. However, those so if we get to exit with two lots, and if we see the market again is showing all the strength, we can look for re-entry later if the market gives a dip. But however, I generally don't recommend if it's happening later in the day, and a lot of things can change. So whatever we do execute, if it's not done in the first 1 hour, then we should stick on to the plan and be with it. And anyway, we have made a fantastic profit. The return on investment is very good, and we look for a new trade once again on the next trading session, isn't it? So you can see the bank nifty stop losses hit, but not the nifty. Nifty again, you can see it's started rallying upwards, and even the bank nifty, after hitting the stop loss, it's making its upward move. Well, sometimes maybe we should think we were in a hurry to increase the stop loss, but there's no point in keeping 200, and when the profit is at 1,000, isn't it? If you're looking at that logic, if you're not keeping that gap, what if the market comes and if not hitting 500, even hits 200? So everything is lost. So we have to go with our plan on increasing it. If it gets hit, that's it. Otherwise, we are lucky to continue. Well, friends, thank you for watching, and I request you to subscribe and like my channel, and continue watching it. I'll be back soon and continue the discussion.